Hello, everyone. Welcome back to the Canadian Rational Investors Bitcoin Summary. I'm Brian Beamish, the Canadian Rational Investor, CR Investor to those on Twitter and TradingView. And happy Monday morning. Here we are, Monday, June 23rd, marching through this calendar year pretty fast. We're coming up on quarter end, too, so lots of fun stuff around that. Quick plug for the site, as always. You can go to the site, therationalinvestor.ca, and keep in mind that we're totally redesigning this. Lots of people have told me the site looks like it was built back in the 1980s, which makes me laugh. But anyway, lots of efforts going into recrafting the site and making it really sexy. So look forward to that. Um, uh, I thought I'd take the weekend off from the videos, and I was playing around in the altcoin space. And if you check out my Twitter feed, you can see all the fun stuff that I was doing over the weekend with some people that are involved in the altcoins, and we had one that basically doubled, just remarkable, right in your face as it moved through the weekend. So there's lots of fun there. But anyway, point that I would just make is that if you want to follow what I'm doing up to the minute, you can always check out the Twitter feed. Because this information is all free for the time being, and it's not going to stay that way forever. My way that I've been asking people to sort of remunerate me is if you would like to help me out, and hey, every penny helps these days. You can go to the site right now, therationalinvestor.ca, and then there's a nice donate button here, and click on it, and away you go. And I do see that people have been making incremental donations, and that's totally awesome. And thank you, and it just goes to show that this whole idea actually works. So, all right, enough of this sort of pitch. Let's get on to the charts. All right, so without further ado, let's get on to the charts and do our Bitcoin summary. Just so you know, this video might go a little longer than 10 minutes. That's my goal for these, but we've got a lot of information to cover, so let's see how it goes. Okay, so hopefully at this point everybody should recognize these charts. This is our daily chart of the Bitcoin listed on the Phoenix, Bitcoin Phoenix exchange, and been having lively conversations over which exchange is more important, which one has more influence. For my purposes, I happen to have the capital that you guys have so generously contributed to me working on the Phoenix exchange, and I'm just trading cash. I'm not trading margin. So these are the levels that I'm going to work with, and that's what I make reference to off of these charts. I understand completely, some people prefer stamp, some people prefer BTCE. And all I can say for the purposes of these videos is, just take what I say here for, for what it's worth, and you should be able to eyeball the same levels on whatever exchange you're using. Of course, quick plug for the new site. I would be more than happy for members through our trading room to go and review all the other exchanges. But anyway, all right, so here's our daily chart of the Bitfinex. Here's our bottom. Here's our breakout 150. Here's our rally peak 1100 and change. Here is our year-to-date top, and I kind of like to work with that. You've heard me talk a bit about this, but here is basically off of the entire year, the entire 52-week range. And here, what a coincidence, the OTE short sweet spot and this long-term trend line here just so happened to correspond with that high. Here is our ultimate low, 340. People that have listened to my seminars and that I love to make reference to the optimal trade zone. This is basically the level at which where institutions would be most interested in buying if they were bullish. Remember, institutions don't buy at the top and they don't sell at the bottom. And I also have made reference recently to the fact that every time that the market did go into the OTE zone, you see that it was rejected. And long and short of it here is I think that that's probably an area of pretty good support going forward. You know, what's sort of a nice simple reference you can use? Well, it seems to me $400 is jumping out at me. Um, you know, we've talked lots about this unregulated exchanges and some of the nefarious practices that each of them have. I understand kind of why you get these violent spikes. So obviously, no level mentioned is written in stone. And you know, if there's a stop run or something like that going on, obviously levels can be exceeded. So you know, obviously, you have to take that into consideration. All right, so the point of the matter here is the daily chart. After a nice long consolidation, we did basically turn through the OTE zone. And so at this point, you know, because we have a fairly well-established bottom, if we were to bounce, where are likely bounce points? And I'm a big fan of the 38.2. It's the what I call my first stop target. You'll notice that that 38.2 also happened to line up with the 200-day simple moving average. So not really a big surprise that the market stalled there. If the market is a bull, then it will recapture this 38.2, and like we said just a moment ago, odds are probably going to head up into this OTE zone up top here. That's you know, usually what I found just studying charts over time is that you know, the initial test of the 38.2, usually we get a fib play off the other direction heading back down. So you know, it's probably a good idea to say, ask yourself, all right, so then what are OTE levels off of this rally back to the 38.2? And basically, I think the market is in the process of trying to figure out what that is. So let's head on over to the 4-hour and see what it has to say. All right, and of course, you know, my silly charts. They get, and actually, I suppose this is a sign of a, you know, a pro technician, is they get awfully marked up. And I highly encourage you to mark you up your charts, you know, because little visual cues certainly help in your sort of trading acumen. So anyway, here is that low that we talked about. In fact, here, let's zoom out just so we get a nice reference. This is the year-to-date range. You know, I've made lots of reference to that in my talks and videos recently. Where is that year-to-date high? There it is. All right, so around $1,000. You know, market structure turned bearish, worked our way down. Ultimate low 340. You'll notice that the bottom really didn't look like this sort of well-defined market structure. A violent spike back. Sadly, that's not indicative of long-term bottoms. That means there's still a lot of volatility in the market. Having said that, we did come back and consolidate that bounce. And you know, just looking at this range here, the year-to-date range, some of these numbers jump out nicely, and specifically 38.2 up to the 50% level. And I've talked lots about Mr. Gann and his 50% rule, so that's where that rally is. And like we said, off the daily, that was the 38.2 here. We can zoom in on this to give you a better idea. So if we zoom in on this daily chart, there's that 38.2, which happens to correspond with this year-to-date 50% level. So point being that, you know, I think coming off of this inverted head and shoulders here, you know, nice bottom, you know, like we just talked about, you know, market structure, this is not indicative of bottoming action. This is. And so when I posted this chart a while ago, I even said this is a textbook definition of a market structure change. This consolidation off of this initial burst set up this nice bullish harmonic pattern. So again, you know, another, you know, so you've got daily 38.2, 659. You've got the 4-hour 50% level. You've got bullish ABCD targets. There's lots and lots of reasons for this market to look to top out up in this area. All right, so let's zoom in a little bit more and see what we got going on in the short term. Shorter. We're going to get really focused here in a moment. Okay, so there is our bullish ABCD target. I noticed, and I sort of made reference recently, that the last correction duration started basically middle of April and went through to the beginning of May. So if we just sort of said, well, let's, I think Bitcoin obeys harmonic patterns very, very well. So let's just say hypothetically that this market is moving in a nice synchronicity. So that would mean that our this correction, the duration of it ought to be somewhat the same. May not be exactly, but somewhat. So, if we said our high here was this 585 area, I think, something like that. If we just implied a similar correction time frame, where would that take us? And hello, here we are today at the end of this correction zone. So we're at an interesting crossroads here. One could argue that, and that's sort of what these lines are here. And let's zoom in a little closer now. And I've sort of made this argument before, but no reason why we can't make it again. If a market is in a bull phase, then the 38.2 fib will hold, and the market will actually bottom at that 38.2 and resume its trend. And you'll look back on price and you'll be like, you know what, that's a pretty darn bullish market. And it just confirmed the fact that the market did turn at the 38.2. So I've drawn this recent price action here, this fib here off of this entire range going all the way down to 340. And you'll notice that the market did come down and bottom at that 38.2. Now, as technicians, we always want to ask ourselves, especially if we're really thinking about buying and we want to be long, if the market's going through a corrective phase and we want to buy, where's the most likely place for the big boys to take their shot? And if we look off of this entire range, we have this OTE, or the optimal trade entry here, is the 61.8471 all the way down to the 78.6413 area. Remember, we said on the daily chart that this wide, massive optimal trade zone on the dailies, we sort of said that, about $400 seems to be somewhere where the institutions really are excited about this thing. So not a big surprise that our 4-hour OTE just so happens to be there, 413 up to 471, right in that zone again. And what a coincidence, that's just right off of this original double bottom, this inverted head and shoulders that started this whole sort of recent rally to begin with. So, that's sort of how I've been looking at the market recently, is that, if I did want to buy and I've got a whole bunch of cash, so basically I would like to be a buyer, where is the best place for me to consider taking a shot? Considering we have bearish market structure working right now, I cannot argue that we have a nice bottom working and you just go and buy the market. So if I'm sort of in doubt, where's a good place for me to think about doing some buying? And I hate to say it, but this this 413 to 471 sure jumps out at me. So that's sort of what I've been keeping in mind. First stop target was hit. That happens a lot. If this is a super bull, then we'll bottom here and we'll resume our trend higher. But odds are, if I want to be a buyer, and if where are institutions going to consider buying, this is the area that I really want to focus in on. So that's sort of been my stance for the past little while. All right, so if we take a look at the picture from a little shorter time frame, and we'll just zoom in the 4 hour here. Um, a few things jump out at me. Here's our original top, right? And I remember when we consolidated through this, I was just sort of like, wow, this is a big hurry up and do nothing. And we had this wedge, and it gave a head fake higher. And remember this 672 number we talked lots about, eh? Look how it hit that level twice. It could not get through there. And we said that if you were a lower time frame player, you did have a bullish setup here, but your stop had to be 637. I'm sorry, that's just the way it is. And indeed, the fact that 672 was not broken here, that the move through 637 actually represented a very well-defined M top. And actually, one could argue that this in itself is a sell signal. You could take that sell level and risk basically to the top here. This would be your risk window. Your reward window, you'd want to be shooting for some serious reward. And gee whiz, you could have used the 38.2 as a nice little target. You'll notice too that just off of these recent lows, this 38.2, this is a fib just drawn off of this low here, the 419 level. That should be 419. What was that low? 419.40, so I'm not quite sure. Sometimes these fibs can move around. Let's correct. 419.40. Yep. All right, so you'll notice that you could have used this 38.2 as a nice first stop target, and look how the market, you can even see, the market, when it broke that 637, zoomed right down to the 582. And I talked lots about this in the trading rooms and stuff like that. And the market bounced right back to that, ran right up to the moving average. And I also talked about this in our video, in our videos, that this moving average tag in itself is a trade setup for some people. That's the Linda Ratchke Holy Grail setup. So we came down to the higher time frame 38.2, which really I don't think should have been a big surprise. We put in a nice bottom, and we rallied off of that bottom. And this sort of was how we sort of left the past week, where we rallied out of this. And I was posting lots about dead cat bounces and things like that. And I think I sort of left off last week with, Willie overbought, a little bit dangerous here. Bearish momentum divergence on this latest move higher. So I think I said in our latest videos that we basically were range bound, where we had this top of the range here, this 619.60, and the bottom of the range was the 38.2. And I found it fascinating because I think these lows were right on that fib. I have a low here, 382.37, and I see 380. Can't even see what that number is. There's zub, zub, zub. This is 582.42, and this was 582.37, so that's awfully close. I think when we drill down to the lower time frames, you'll see that actually a little bit more in detail, but we'll get to that in a second. So the point of the matter here is that really this is the top end of our trading range. This is the bottom end of our trading range, right? And my hunch, and I think I sort of left off the last video with the notion, and I seem to remember that I even suggested that I thought that maybe we had a head and shoulders forming here, something along those lines, where this is your left shoulder, this is your head, this is your right shoulder, and I remember I said, I bet we're going to go up to like 612. And so the high on this rally high, I mean, this is freaky when this stuff happens. But you can see the rally high here was 615. Fascinating, eh? All right, so let's now, so long and short of this, we'll just finish off this. You can see this is the original downtrend line off of the original top. So we've come down recently and tested that. we've broken this low, and that's got to be quite concerning because now we have quite a big M top forming here. My hunch is that this 38.2 isn't quite done with yet, and we might get a nice little counter trend rally back up into sort of moving average resistance. When we look at the lower time frame charts, you'll see what I mean by that. But I hate to say it, but Willie broke down nastily here, so Willie's certainly not happy just yet. We never did get to stupid oversold, so this thing could still work its way lower for a bit here. Momentum, not bad. The reading, I think I remember we left off the last video. We said we had a little bullish momentum divergence working here on the 4-hour. So as a result, maybe we can see a bit of a rally again. That sort of confirms that head and shoulders idea. I suppose bulls would be a bit concerned that we never could rally back up into the OTE zone here. This OTE zone is still perfectly valid, so it's just floating out there. But for the time being, it's sort of off the table until we resolve this current trading range. All right, now let's zoom in on the 1-hour and see what's going on. And I think for the purposes of this video, I thought I would just mention this. I like these TradingView website, and I've got a little, posting place here. You can see I post a whole bunch of different other stuff. They still chose Mt. Gox as BTC. That's funny. They probably should update that. But long and short of it here is a lot of my write-ups and posts are listed here, so feel free to check them out. And a long history of posting, so get yourself a really good sort of feel for how I look at the market. Anyway, so my most recent BTC post, which was done over the weekend, and it was funny because I was joking with a guy saying, I was so tempted to do a video because this was such an interesting setup here. But my most recent publication here I did was, and this was yesterday, I posted a fail at a bearish Gartley point D, suggests short. And so this is the 1-hour we're looking at. And if you want to read up on my sort of views on the trade setup and what was going to happen and why, I'd encourage you to do that. But long and short of it here is, like I'm a big fan of harmonics, and if you drew a harmonic pattern, you notice that these X, A, B, C, D line up very well with what's called a bearish Gartley pattern. And you can Google that. All you got to do is just we'll take a second just to show you how easy this is. All I did was just click on Google, and I'll go bearish Gart. Oh, look at that. They're already coming up here. Gartley. Just click that, and boom, images right here to describe what they look like, or you can click on the images and get lots and lots of examples. So pretty easy to learn that stuff. But anyway, long and short of all this is the Gartley pattern, unfortunately, usually leads to pretty dramatic moves to the downside. And I actually thought this actually set up a pretty good trade because in essence, while we were saying, the dead cat bounce has played itself out, and here was the 200-period moving average, and there's a downtrend line here, I wasn't quite ready to say, all right, this is a short setup. You can see, and I even tweeted that when we broke this low, 601D, right here, that we had a double top working. So really, short setups in that area were not a bad idea. And if you just drew 50% level, there's Mr. Gann's 50% level, 570. So a short from 601 is 30 bucks of reward versus $19 of risk. Well, that's not bad. I personally like 2-to-1 risk reward at least. So what I wanted to see was, first, we were going to come back to 38.2 and sort of, earlier I said we take a look at that number in a little bit more detail here on this next chart. So you see 38.2 was 582.38, and look at what the low on this bar was, 582.37. I mean, that's just sick. It's incredible when you see that happen. And in fact, are those numbers correct? 15. Oh yeah, okay. So long and short of it here is basically the 38.2 first stop target just played itself out to perfection. And what ends up happening here is that if we get a harmonic pattern off of this 38.2, it often sets up the ultimate move for whatever this is going to resolve. And so the OTE level, or where institutions would be interested in buying this market, was sitting down here at this, let's call it the sweet spot is the midpoint. Mr. Huddleston, ICT, he loves that level. 550 area, and then if we look at the chart in particular, look at what we happen to have just sitting here. There's two big juicy fat gaps, and we all know gaps love to be filled. Anyway, long and short of it here is that they line up right with the OTE level. So bearish Gardley pattern set up a very interesting trade where I figured that, if Gartley is correct, and Gartley, again, no setup's 100% correct, but let's assume that it's 50% correct. If we can get trade setups that give us more than 2 times the risk that we take, then even if we're right 50% of the time, we end up making money. So, one could argue all you need to do is just double the size of this box and project that off of here, which is probably somewhere down in this area. And that would be your 2 to 1, which you probably want to just take on a knee-jerk reaction, or maybe even just put a stop there. But I ultimately can believe, just based on the OTE principle and the fact that these gaps are sitting here and the fact that this is a V bottom, keep in mind that this was a new low here, I could realistically make the argument that we could get a nice test of these lows. Then I looked at momentum and volume just to see, are they suggesting a short idea, or are they suggesting a long? And lo and behold, look at where Willie was. In fact, on this spike up here, I had posted that there was lots of people that follow me take lower time frame setups. And so I posted on Twitter, there's a 15-minute bull ABCD pattern, lots of reasons for the market to rally up into this area. In fact, if we pull up the 1 hour chart, yeah, here it is. You'll notice that here's the low here, 582.37. OTE short sweet spot off of this entire down move to the 38.2. It just so happened to be 608. And then you remember on the 4 hour, we were talking about a potential head and shoulders, and I said, well, odds are we're probably going to get a rally to 612 or so, somewhere in there. So lo and behold, the silly market rallies up and hits this spike high. And it's funny because I even tweeted just on the breakout right here, I tweeted, oh, bull ABCD, look out, she's going to rally. And boom, she just popped violently. It was remarkable to watch. It just happened just so quickly. And I posted right away, holy crap, that happened so quick. But anyway, interesting to see how we rallied right up into the OTE zone. So, perfectly expected. You could argue this was a inverted head and shoulders pattern here. So our target was going to be up in this area anyway. Here was the bull flag that I made reference to, bull ABCD. And if we got a fail, because this rally was right off the 38.2, if we got a rally and a fail at the 78.6, it sets up a textbook Gartley pattern. And the Gartley pattern, like we said, you can Google it until your heart's content. It basically suggests that a fail at point D can set up a precipitous decline. And so that's basically what's happened. Now, if we break point A, then that sets up a bearish ABCD pattern. And so, just using this simple reference, you can see that just in the short term, I can justifiably see a target of 575, 576. So here's that short level, 602.34, that I tweeted about, and that was off of this double top breakdown. For those people that we were watching the lower time frames, we actually got a 15-minute fractal top up here at about 6:05. And what was really interesting about this trade was that a lot of people were super, super bullish. And even in like the Trading View chat community, that's this sort of services right here, I met a lot of skepticism on this trade. And they often say in trading that the harder trade to take is usually the right trade. So go figure, market comes down. And it was remarkable the whole way along here. The bulls kept saying, "Okay, this is the bottom. Okay, this is the bottom. Okay, this is the bottom," and the silly market just kept grinding down. So it's absolutely remarkable to watch this thing play out. Now, here's the issue, right? For traders, this was the trade setup, right? Risk reward. I would be very remiss to actually go in and tinker with this trade right now. I am best served. What's in my best interest? My best interest is just to leave this thing alone and just stick with my original trade setup. And that's a hard, hard thing to do as a trader. Now, as I said just a moment ago, I can justifiably make the argument that if you started getting chicken shit, excuse my French, um, you can consider looking to exit at this level here, right? 2-to-1 risk reward. But, starting to tinker with the trade idea at these levels, in my opinion, is actually not doing yourself a service. So half of being a trader and the real point of what I'm trying to convey to the public here is that you really have to approach trading with a trading plan. And that the trades, if this happened to be the setup that you took, and this was the risk reward parameters of the setup, these levels are predetermined before you even put the trade on. And, sitting here and watching the chart ad nauseum, and, oh my God, is this the buy? Oh my God, is this the sell? That actually just doesn't do you any service. And so, I'm going to leave off today's video with just the notion that yes, I am short, and that as a disciplined, patient trader, I'm going to stick with my original trading plan. And that was, this is my risk on the trade, this is my rewards. I will consider moving my stop to trailing, i.e., previous significant highs or lows tested, should we get this 2-to-1 risk reward level tested. But until then, this is still my original risk reward, and I'm best served just leaving the trade alone. All right, guys, so that's today. I don't know how long this video was. It's probably like an hour, but anyway, I tried my best. I really wanted to convey sort of what I see happening here in the Bitcoin. What I really, really like is I'm totally enthused by the public's general interest in the information that I have to convey. I'm really interested in the altcoin space, as sort of a driver of day-to-day setups. I mean, like I said, we had one that basically doubled over the weekend. I don't think you're going to find Bitcoin trains that double. And what I really like as sort of a membership teaser subscription driver is that I think I'm basically going to do the same analysis, same kind of trade setup, follow your trading plan, yada, 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 on the altcoin space. And if you would like, help with, building trading plans and, what markets we're following in particular, that's where the subscription kicks in. So I hope you've all enjoyed today's offering. Lots of action, lots of fun. and never a dull moment. And basically, all the best. And I suppose we'll talk to you tomorrow. All right. Have a great day and cheerio.